Hey everybody, hey traders, welcome back to the Poll Report. Happy Friday. It's 9:30 on the 22nd. Forgive me for the little split screen. I'm just going to go to the charts here in just a moment. Just want to make sure everything's coming in loud and clear. If you would do me a favor in the Discord group, if you're watching from my Discord channel, would you start chatting in the Discord, please? Just want everything's coming through live. We should be pushing on YouTube. We should be pushing on Twitter and Facebook and other respective streaming platforms. So to make sure this is coming through live. If you'd post a message in Discord, let me know. Watching live, kindly confirm here. All right, I'm going to switch gears into the charts. Let's have a look at everything this morning. So we just had opening bell, 474.16 on the SPY. We have the all-time highs sitting at this level. It's a weekly chart. All-time highs 479.98. We still have a few more dollars to go, another maybe 1% or so to the upside. Looking to see if that chart alarm gets hit. We've clearly had a little bit of a stall this week. Low volatility as expected as we have the final trading week of the year. So full trading week. Next week is disrupted. Christmas Day through the 29th. That'll wrap up the month. And we get into the new year. I will be watching along with holiday trading for the next couple of weeks, but I will be traveling tomorrow through Wednesday, Thursday. I'll be gone. So if I post a video, it'll be from somewhere, but I'll let you know. I'll be pretty active in Telegram and the trading rooms if needed, as well as in Discord. If you need to get a hold of me or get in touch with me, you know how to do that. And that should be it. Let me take a look here at the stream. Good. Okay, back to the charts. All right, so SPY at 474.35. Futures market, let's take a quick poke at that. Futures for the morning. We had some drops in Nike last night with some surprise cost cutting. That's down some other instruments as well. So the Dow futures bottoming out a little bit this morning. S&P futures up. NASDAQ futures up. Gold at 2076, which is back up to retest those highs. That was major resistance before we had that big spike up towards 2100. Silver 2477. Oil is still making a little run from that $68 support up to nearly $75. So we've got some run in the futures market. Wouldn't be surprised if we continue to push a little bit higher. Today is Friday, so we'll wrap up the day at 4 p.m. Markets have been pretty quiet. Let's go the last couple of days. So we had that big sell-off on Wednesday afternoon. So today we're gapping a little bit higher. I wouldn't be surprised if the market, struggles to take out the high at 476, maybe just kind of hangs out around this gap area. And then over the next maybe 1 to 2 weeks with holiday trading, that might be what we get for a push to the upside. I didn't anticipate looking for some straddles or strangles going into the next week or two. But if it's cheap enough as far as going long on the options, I might do that just to see if we, I'd have to buy some time. I don't really love it, but I think that the market is likely going to have some type of movement, to the upside to take out the highs. Just depends on where I can get my premiums at. So, maybe I throw on like a $2 to $3 debit. Maybe I can grab $1 worth of profit over the next week or so. I do have a lot of that coming into my account. Alcoa is one stock in particular. There's a few that are doing pretty well for me. So Alcoa continues to rip to the upside. I own the shares, and that ownership has been break even around like $30. And let me go to my other chart as well. So let's take a look at this. Also, just let me spot check the chat really quickly. All right, watching live, Jordan. Watching live, Kathy. Perfect. Watching, I think YouTube let me in for the first time. Hey, all right. Good. So Alcoa is doing really well. I can... Well, I know that I own the shares in the low 30s. Probably break evens like 29 and change right now after some covered calls and some credit spreads. I also have a naked put at $23 for some income that should generate about 95 cents or so in total credit per. It's like 25 cents a contract. I think I'm doing 4 contracts there. And I just looked at a couple of different plays on one of my Schwab accounts to just do, give me $100 here, $100 here, $100 here. And it should be like another $500 of profit. Over the last week or two, I talked about this yesterday in my Equities on Demand trading room. A couple of things I want to highlight. I mean, this is one of the last sessions we'll have for the year. as things kind of quiet down and I'm taking a little bit of time off. Everything will return in full for me on the 8th of January, but I'll still be around. I'll still be, active in the Telegram groups for the channels as well as Discord. But I just took a look at, how we did this year in the trading rooms, equities on demand. We can just take a quick peek. I mean, this service has been going on for close to 3 years now. If I go to closed one, showing 367 trades with winners versus 234 losers. So 367 and 234. Let's do the math on that. So 367, 264, so 631. 367 by 631. So we've been averaging around 58% winners, and most of the trades that we have taken with equities on demand, we're grabbing 50 cents on the dollar, 55 cents on the dollar. Sometimes more. If we go deeper in the money, we get 70 to 75 cents on the dollar. So that being said, I mean, even if I took 1,000 trades, which with my lines here, if we go down to our trade list, I mean, we have taken a fair amount of trades. In fact, we are well over 1,000 trades the last couple of years. So let's just say this: I'm at 1,092 lines on this. I'm just going to assume that if I have 58% winners, let's say I risk 50 cents to make 50 cents. So 1,092. That means if we're winning 58% of our trades, 633 winners, and let's say we're averaging $50 a trade. Let's do one contract. We make 50 cents on credit spreads. There's a bunch of other trades too, other strategies and whatnot. But let's just say on average we're making $50. So 458 times $50 on average. I mean, over the last 2 years, 2+ years of trading with this service, this is a positive number. I just did the math with the subtraction. Traders are up with me over $22,000 on one contract with equities on demand. If that's all you did was trade credit spreads, pretty decent. Good win rate. Obviously, I'd like it to be higher. At one point, we were batting like 70%. We, took a series of losses on downturns, and it's okay. We know how to repair. We evaluate the environments. Delta Trader's new service that I launched in late July. Looked at this one. We just have some additional profits coming in. I want to take a look at JWN really quickly because that's a repair stock that could give us another probably $4 or $5 a share. We're at $18.46 right now. So if I go into that, JWN, so I'm going to take a couple small losses right here. But just in the last week, I think I did the math on this yesterday. We're up $9.81 per contract. Again, if it's one contract, 981 times 100, you're up $981. If I take the full losses here, we're still up 197, 123. We're still up 661 for the last 2 weeks just on this. Now, total credits versus debits, 227.23. I think we're up over $40. 227.23. And then take away the debits. 188.86. So minus 188.86. 38.37. Okay. Now if I can repair the JWN, which I own the shares at $15, or up to $18.46, I'm up $3.46 a share. If all I did was take profit on it right now, that's another $3.46 of profit, which puts me over $40 net gain per contract. Again, if all you did was take one contract with me, traders are up $4,000 in the last couple of months just with the service. So stocks and options is working really well. We're having a lot of fun, teaching a lot. Traders are understanding it, adding it to their arsenal. And then, of course, there's Forex trading, building portfolio positions. We had a great year in the Flex trading room. I crossed over 60,000 pips for the year. It wasn't all me. I'm not going to take full credit for it. It was me trading, but I owe a lot of the credit to my robots. My robots ended up generating close to 45,000 pips for the year. And manually, I did about 15,000. But, I said 15,000. There's still another 10 to 15 to 20,000 positions pip-wise, just based on some carryover trades. My portfolio builder class, I'm looking at these Swiss crossovers, and they haven't paid yet. I'm still holding. I'm generating positive swap. My balance is up like $115, $120 just in the last couple months since I launched the course. I'm just sitting in small drawdowns, managing those positions, looking to add to them. But there's just lots of upside potential here. let's say that manually in the next 6 to 12 months, these trades pay out. My manual trades go from a $15,000 win, chunk in 2023 and have a big boost in 2024 with a big, 20,000 plus pip gain. Then the robots still continue to do their thing and no complaints. So all in all, I just want to kind of throw out a little recap of how things are going in the trading rooms. I keep offering that up. It's in my Discord channel as well. If you take a look, if you're in the Discord channel and you go into education, you have all these different options here. What I just talked about was Flex Trading Room. You're trading Forex with me. Equities on Demand Trading Room. You're trading stocks and options with me. And then I have a bunch of other courses with automations. Master Flex is my trading room. That's my core strategy for Flex. Easy to read, easy to use, easy to follow. Master Flex, same thing. These come with robots as well. Delta Trader, that's short-term, week-to-week options trading with a lot of creativity there. Portfolio Builder is investing in the Forex market using Positive Swap right now. Perfect Storm is a full auto robot for me. Perfect Storm Original, full auto robot for Forex trading. Pockets Pattern Pro, full auto robot. Equalizer, I'm starting this one over. I'm gonna adjust the settings a little bit. I had a disruption in my broker server, so I ended up closing out the account and just I'll reset it a little bit. But Perfect Storm Pro, Perfect Storm Original, and Pockets Pattern Pro run full time. And then Momentum Breakout, I'm going to be following just simple strategies next year on a daily time frame. Easy class, easy to learn, easy to follow, unique price style, and then a full, complete series that I did with a previous service of mine, Survival Trader, where I did, full pattern trading, market structure, market mapping, stuff like that. So complete series you can rent or own these videos. And then these are all courses that you can have. So if you want to check them out, you want to ask me questions, jump into the free chat and have a look. And you know how to find me. So that's a little recap there. Let's go. I'm missing some comments and questions. Let me log into YouTube and see what that's looking like right now. And make sure I can address some questions. Let me go Chris Pulver. See that Cuppy's back on Market Huddle Plus. There we go. Looks like I'm live right now. There we go. All right, so just to give a quick shout out to everybody. Ann, good morning. Herschel, good morning. Ian, Larry, David, Chris, good morning. Andrew, Trish, good morning. And nearly happy Christmas to everybody. It's only a couple days away. This year flew by. Morning, Gary. Morning, Donna. And do me a favor while you're watching, hit that thumbs up button on the YouTube channel for me. So cool saying that stuff, Like and subscribe. Anyway, let's get back to this. So JWN, I've got chart alarm set at 19 and 20 bucks. Those levels get hit, I'll protect the profit for 4 to 5 bucks a share. That'll get me over the $40 mark for my credits on Delta Trader. And I'm not looking to hang on to this stock. I mean, structure-wise, you can see we have lower highs. We're getting these kind of lower lows. This could be a big wedge where maybe it does make a big run to the upside, maybe. But it's also, and here's why it's interesting. You're sitting here at COVID lows back in 2020. Pretty attractive level, but I already own some stocks that are doing the same thing. Under Armour, I own it at the same levels, just below those 2020 lows. Started to, get some credit spreads in here around the $6 and $7 zone. Now we're at 861. I'm looking to see if Under Armour can make a run back up to, let's say, the teens. I'd love to see this thing back to 14, 15. I'd love to see it run up to these previous highs at 22. And realistically, I own the shares around $7. So we run up to 22 bucks. I'll certainly take, $10 to $15 a share and not complain whatsoever. We go to Nike. There was news on Nike last night. Dropped down to 107. We're off the highs at 180. So that's a pretty big drop in Nike. I could see, that's a 54% dump in Nike with the lows back in 2022. I don't know. I'm not super interested in just getting long. Certainly not owning the stock at $110 a share, but maybe getting creative with some option trades. I think the structure is still solid where this higher low continues to hold, but I would be looking for some consolidation. So we have high to low, a little bit of consolidation, lower highs, higher lows, maybe a wedge is forming. But if we come back and retest some lows around, I'd say anything under $100 looks pretty good for Nike overall. If I look at let's see, dividends not really offering much. I still think it's kind of a value play. You got to believe in the consumer. I'm a consumer on Nike, probably more than I should be. But they're good to their members. If you have the Nike app, you get these 25 and 40% off special, promo codes. Plus, you can double up on the discounts if you like Nike shoes. If you don't, I'm sure there's others. But nevertheless, it's not just shoes; it's apparel as well. So anyway, stock that I'd be keeping an eye on. This has a big kind of influence on other retailers. So I mean, I know Foot Locker was on watch, Adidas on watch, other companies doing the same thing. So Under Armour, kind of a competitor, but Under Armour sitting at these major lows. I'm looking to stay long on Under Armour. Alcoa, like I said, has been ripping to the upside in a big way. So owning this thing, sub 30 has been a nice little run to the upside. I can check and see how my positions are doing. This is what I have running right now. So I have some naked puts for some income. I've got some credit spreads here. So the 32 by 30 out to January, that's a 58-cent credit. The put protection likely is going to be useless at this point, but it didn't cost me a lot of money. I paid 29 cents to protect the downside. On the income, that'll be about 95 cents credit. And yeah, I'm just going to let it run. I think this has some potential to get back into, I mean, right now, even at $33 and change, if we go to, let's say we go to 40 bucks and I'm happy cashing in 10 bucks a share. I'm good with that. If I want to be a little bit more patient, I think 45 to 50 is also decent. BIB, let's go Alibaba. We're trading at 75. I still like the plays here. Just going to watch carefully for some more confirmation. Baidu, trading at 116. Ended up getting assigned a 110 by 115 and took a small profit out of it. I mean, it actually probably net loss should have been the case. I'm not sure why the broker didn't assign me inside the spread. But anyway, I was holding short at 115, made a couple bucks on it or something, but nothing crazy. And the rest is, bull put spreads, and we had kind of a straddle situation, but I still like the trade, either building positions on it now, which we have a bunch of these expirations out here. So the 120 by 115, the 135 by 130, the 110 by 115 was profitable. We took some profit on that one. And then also I took some profit on Alibaba as well. But if we come back down to the lows here at 88, I would love kind of this double bottom area at 90 bucks. Start looking at additional credit spreads, long calls, stuff like that. Buy BITO, that's Bitcoin, 2136. Potentially January 10th is an ETF launch. Grayscale, GBTC. You have also like BlackRock and Fidelity looking to launch their own ETFs. This is a ProShares ETF I can trade options on. Right now the position's doing very well, and credit spreads are just all profitable. Just an income credit spread here for another like $100 is profitable. The long call out to January of 2025. I've got room on that thing to run. So if we end up breaking all-time highs where, let's say, Bitcoin gets above 68K, that probably brings BITO up above this high around $45. I mean, I have a $16 call that if it breaks the highs at 45, you can do the math on that. I take a trade that cost me about $2.75. If we go, let's say we get 45 minus 16, that intrinsic value on the call is $29. And divide that by 275, what I paid for the option, I'm up 1,000% in that position. So I would not mind at all, taking a $270 risk to turn it into $2,700 or more. And there's more to add to it. I can probably stagger it out further and get more creative. But, I also need to time this well. I mean, I don't know if the ETF launch is going to be a dip first and then a rally or just a full-on rally. Let's go to Bitcoin prices right here. We're trading at 43.5, a little pause right now the last few weeks. A pullback would be great, but if we don't get one, I mean, a pause and a bull flag also mean the same thing. So bullish, pause, bull flag, break above. We eclipse 48,000. Momentum takes us up to 65 or 68. I wouldn't be surprised if 85 to 100 is the next stretch on Bitcoin. So overall, I'm pretty darn bullish. I've talked about this podcast before. If you follow Weiss Capital Management, Jordy Visser, just launched a session. He's going to talk about it multiple times, but I've shared it in the Equities on Demand trading room about the 50, 30, 20 portfolio. The 50 would be your fixed instruments, like taking your money markets at 4 and 5%. Your 30% there. I guess I'll type this out. This will be easier to follow. So if we did a 50, 30, 20, this would be your fixed income, so money market, and try to get the highest yield you can, lock it in for the next 12 months. Right now, you can still get money market instruments at 5, 5.5, 5.25. Obviously, do something reputable. I mean, I wouldn't want to put anybody's, FDIC. Don't overstretch your FDIC. But there's ways to do it. I mean, go with banks that are too big to fail, in my opinion. Bank of America, Wells Fargo, Goldman Sachs, JP Morgan Chase. Right, those are some pretty reputable ones that I would say. I have a couple of those in my Roth IRA, a bunch of money market instruments, and bank CDs. 30% would be your traditional 60-40 portfolio, and the 20% would be Bitcoin. Now, I'm not prescribing this necessarily. I know some investors that are as high as, 40, 50% Bitcoin. That's a little aggressive. I still think Bitcoin is still risk capital and pure speculation at this time. But if we have an ETF that passes in January, that changes this up quite a bit. It was interesting listening to the podcast last night because the comparison was, the NASDAQ back in the early 2000s, right? Through 2007, 2008, if you invested in NASDAQ over S&P or NASDAQ over the 60-40, it outperformed. And part of that was just because disruptive technology tends to gain faster. It's more speculative. It tends to be priced in, where this is what the market's forward thinking. And so Bitcoin is kind of that same situation where if it really takes off, it's forward thinking, the type of gains you can have. And again, it's not like you're putting all of the account on the line. The statistics are pretty staggering. If you had 1% exposure in Bitcoin for the last 10 plus years, you've doubled your performance in the S&P. So the average returns over the last decade have been roughly 10 to 11%. If you had 1% Bitcoin on top of that, now your S&P overall portfolio performance is over 20%. That's 1% exposure. I think most traders, investors can understand, like, 1% exposure to double your gains is pretty impressive. So obviously 20% is a little bit more than that, but that would be, kind of your mix to potentially outperform the market, where instead of your annualized 8, 9, 10%, maybe your 20% Bitcoin exposure now lets you make 15%, 20%, 25%. And of course, we'll see. I like all of this, but I also think that, whatever you want to own, trade options around it, lower the cost basis, have protection. Whatever you like, trade options around it, leverage it, and generate more income with less capital outlay, right? Forex wise, Forex isn't going anywhere. Bull market, bear market, risk on, risk off. We'll trade the dollar, all this stuff, right? All right, let's see if I have any questions here. Everett, good morning. Jacob, good morning. Thanks, Donna. So, all right, let's have a look at the dollar index. Dollar index is doing what we said, pushing down. So if the dollar's pushing lower, I do expect those stock market indices to go higher. So the SPY, if we can, and again, the SPY is the only one that hasn't touched the all-time highs. The SPY all-time highs at 479 and change. If we can get there, may not be today, maybe it's next week. We don't have trading on Monday with Christmas. We don't have trading on Monday the 1st with New Year's. But there is still that holiday melt up, that holiday drift. 'Tis the season. So wouldn't be surprised if the SPY catches up and matches the DIA and matches the Qs, which those did eclipse the all-time highs. And they're slowly still melting up. CENXL, check that alert. Qs right here, just breached the all-time highs on the week. We're actually closing higher, which is kind of nice. There might be some more upside. There might be some more melt ups. This is a credit spread we have out to the 5th, which is not this Friday or next Friday, the weekend after. But I think that we can confidently say that we'll stay above 394. We'll make a net 50. I think it's $50 in this one for me. So it's 25 cents. I did 2 contracts and make a few bucks there. So just a simple play. I try to get that on all of them. If we were filled, we try to get filled at $1.25 on the DIA and the IWM and the SPY. Had we got those positions filled, we'd have 25 cents net credit on all of those, which would be another dollar net credit. But the Qs filled, the other ones didn't, and I didn't end up chasing it. So anyway, we traded other stuff. We had debit or bull call spreads, and we had strangles and other stuff going that made us some profit. The VIX fear gauge, this could still settle into some recent lows. I think if we get down to $11 or $10, I'm probably just going to buy some shares of the VIX. Just to have as a little hedge. I'm not looking for big gains, but if we have a big pop from, let's say, 10 to 15 or 10 to 20, that could be a little hedge play just to make some money. Again, trading options around what I own, making sure there's protection there. Currency-wise, I hope you check this out on my YouTube channel. So we're live this morning, obviously. If you go to my YouTube channel and check out, let me see if I can get a video in here. Let's see. Let me just go to youtube.com/Chris Pulver. I just posted this video yesterday. It was an all market outlook right here. So if you want to take a look at just kind of looking at all stocks, looking at all currencies, this would be a good video to check out as well after today's live sessions, 20 minutes. But yeah, major indexes, Bitcoin, Forex markets. And we had a good session yesterday in Flex. Checked out Portfolio Builder, added in on the dollar Swiss. I think we actually breached the lows of the dollar Swiss today. And I'm still cost averaging in. So yeah, we're sitting at 85.25 on the dollar Swiss. As far as the, let me see if I can get a chart here for oversold conditions. Let's go to that harmonics and pivots loadout and go to dollar Swiss. I think if we're showing divergence and oversold on this one, then I like how I'm positioned on it. So let's go to, by the way, so let's check something really quickly. So daily time frame. Here's the S&P. Overbought conditions with some divergence. I'm not calling the top right now, but I do expect a pullback to happen. QQQ, same thing. Overbought conditions with divergence. I'm not calling the top, but I do expect a pullback to happen. DIA, same thing. So with these pullbacks, let the markets melt up. It's good for the entire portfolio. Everything's green right now. I'm, anywhere between, 1.5 to 2 to 3 to 4% a day. I've been up over 30% in the last 30 days of my account, which is awesome. I'm not complaining whatsoever. On top of that, some good Forex gains to wrap up the year. And if we have any pullbacks, couple levels, look at your all-time highs. The DIA might pull back the all-time high, and maybe that's going to offer some resistance becoming support. Or this previous high that we had in 2023 back in July, this level becomes previous resistance that now becomes support. So, a little pullback would be nice. If you drag a Fibonacci from this recent low in late October all the way to whenever we have a decent high that's established, just look for some simple fibs. Maybe it pulls back 30%, maybe it pulls like 38%, and there's more upside potential as we kick off in 2024. But that's what's going on. I mean, it's a melt up. It's full on holiday trading, and the DXY is cooperating to the downside. I'll go back to this chart here for the DXY. And then I said that the DXY I think is pretty safe to push down towards 101, which gives us another 45 points to the downside. If we push to 101 or even into 100, that's a pretty big level. This is a fantastic pattern actually, where for traders that aren't familiar with broadening patterns, this could be a bear trap. We get down to 100, just like we did here. We pivoted hard, and that dollar rallied 11 straight weeks. So I could see something similar happening where the dollar pushes lower. Maybe this is all in anticipation of the Fed cutting rates in March, but we don't really know the language that will happen in March. Yes, they're probably going to cut rates maybe by 25% or 25 basis points. That's what the market expects. But I don't think the language of the Fed is going to be as dovish as the market wants to see. If they are dovish, man, they are really declaring victory on inflation. And historically speaking, inflation has always poked back up. So we have this big drop in trend in inflation numbers, and then all of a sudden it rears back up and we spike up. So if we're at 3.1% now, I mean, the Fed would hate it if we pop back up to 4%, pop back up to 4.5%, because all of a sudden they would have to get hawkish again. They'd have to maybe reverse positions and raise rates again, and they'd be back and forth. So I think that if they cut in March, that might be it. I think they might surprise the market where they're not going to cut a full 100 basis points. I could be wrong, but that CME watch tool that we use every single week, we're just going to continue to watch that and see what the expectations are for the market. But I think there's room to 101, room down to 100. If we get through 100, I will then start looking for some dollar strength to kick back in and just trade back to the range. I think there's going to be a lot of range trading in 2024. I think the stock market might range as well. Great environment to trade options, to be honest. So if we can be, a little bit more range bound, we'll figure out how to, make money week to week, month to month. And it might be simple just to do some, if you have the buying power, take some shares, do some covered calls, generate some income, and you can do them. It doesn't have to be week to week. It can be just every quarter. Quarter month covered calls. If the market goes up, it gets called away, but you lock in some gains. You can do it for the entire year, lock in some gains. Wouldn't be too bad. Okay, let's see here. We got to fill on the Euro Swiss this morning on Portfolio Builder. Okay, good. So that would have been another fill at the lows, correct? Yep. So if we bought it around that 94 handle, would have been filled there. Okay, good to know. Let me update that here. Portfolio Builder. Euro Swiss, 9,400 pending, that was filled. So what was that low, Denise? That low, I'm showing 93.97. Okay, so filled. Oops. I need to Don't make me use my password because I don't know it. Oh, fudge. All right. I'll have to sign into there later, but I'll get that updated. So 9,400 is filled at a micro lot. I did 1,000 units, and that's going to lower the cost basis and break even a little bit, which is fine. Thank you for letting me know. So yeah, dollar Swiss, euro Swiss getting filled. I did a couple positions yesterday on dollar Swiss, and I'll just hold and stay the course. CAD Swiss back down to lows. Here's a currency strength chart for today. Swiss is on top, dollars on the bottom. Not a ton of volatility. Only 30 and 30 on the vertical axis. CAD is making a climb to the upside as oil's been up as well. So go back to this U.S. oil. Trading off those, support level, $68 support coming up. It still hasn't broken the trend line, but don't be surprised. If we get a trend line break, break, flag, or break, retest, looking to see if oil, and this is where inflation gets a little ugly, right? If we see oil drifting up towards, high 80s or $90, that's going to be a rough spot for inflation readings over the next couple months. If it is breaking the trend line, coming back and retesting like we did here, I'd like to see this area. Let's say we go up to, $75, which we are right now, but then we come back down to $68. I'd like to establish some positions on here on oil and USO. But if it just breaks and goes, I don't know how much participation I'll have. I felt like USO didn't come down low enough. So USO, I was looking to see if we tested these lows. You can see that it didn't correlate quite the same way. Here's lows at 62, didn't hit them, right? US oil. Here's lows at 67. We actually tapped that same level. We didn't tap the lows here at 65. But anyway, that's what I'm going to use to get position on it, right? There's oil. So I'd like to see if oil can still settle back into 63 or 62 before we get long. Gold. Gold is trading up to 2070. I would be short on gold if we break this trend line that I have drawn right here. If we break this trend line, I think it's safe to short. Good confirmation, good technicals. If we break and close above 2100, either this is a sneaky little bull trap or this is the market telling us that we're going to run against the dollar, which could also be a case. So, right now, everyone that's long gold is probably loving it. But if you're going to get short gold, I'd like to see a little bit more confirmation. And there's plenty of downside. So the nice thing is if you wait for confirmation, you get gold short. That confirmation on the trend line break takes us down to, maybe 1900 or lower, possibly all the way down to 1700. Silver is tighter range. Range highs at 26, range lows at 22. Previous highs around $30, and I'll just sit and hold. Bitcoin we did. Currency-wise we did. Dollar, yen crosses. What's going on with the yen? We're back down to 142 today. Take a look at currency strength. Yen is down with the dollar. Yesterday, yen was on top with the Aussie. Dollar was weak. Today, yen's down with the dollar. I still think the yen can do some tricky stuff. Denise pointed this out. That there's going to be I think it's 24th and 25th, if I'm not mistaken. Is that right? Over Christmas Eve, Christmas Day, there's some speaking going on with the Bank of Japan. There might be some shenanigans there with low liquidity, low volume, weekend trading. So just be on the lookout for some crazy price action on the yen crosses. Hopefully that's not the case, but you never know. Be careful. So let's do this. It's after 10 o'clock. I'll wrap up the live stream here. I appreciate everybody tuning in and jumping into the session today. Angola just left OPEC, will not reduce production. Interesting. Yeah, we'll, like I said, let's watch oil. Let's watch price action. It's always supply and demand, and my outlook on oil for the last couple of months has been we hit negative dollars. We went to 140, and we're trying to find a way to settle back in. I look at it this way: if you think of I always use the tuning fork analogy, where if you hit a tuning fork and you have this big wave of movement, and then it settles back in, that's what I'm expecting oil to do. Big fall to the downside when futures market went negative during COVID, big ridiculous rally to the upside where everybody couldn't do anything wrong other than buy oil. And now we're settling back into some supply and demand areas where I think are more realistic. I think 65 to 95 is pretty well supported. We can be arguably conflict free in the geopolitical landscape. So we'll see. All right. But yeah, a lot of supply and demand. There's going to be some noise there. Also, some other stuff going on. Podcast I listened to last night as well. Taiwan has a election in January. China's certainly going to be watching. U.S. will certainly be watching. U.S. obviously has an election in November. So big election year in 2024. We'll see what central banks do. These are the big things we'll be navigating in 2024. So look forward to seeing everybody and trading with you in 2024. I'm not done for the year, but I'm taking some time off. So you do the same. Enjoy the holidays. Travel safely. And I'll be in Telegram. I'll be in Discord if you need me. You know how to get a hold of me. And I'll talk to you all very soon. Okay. Happy holidays. Happy trading. Talk to you soon. Thanks. Bye.